All right. Good morning. Good morning, everybody. So we made it. We have QRA this morning at 8:30. It's the biggest thing that we have happening this week. It is likely the biggest thing we have happening this quarter. Even though it doesn't get a lot of attention, if you go to most of these sites, you won't see any mention of it. Doesn't matter, which one you go to. I did see this morning for the first time, maybe it showed up on the last QRA, but I've been pushing on this. I always reach out to these places and tell them, look, it's a big one. I don't understand why you don't put it on here, right? I'm just one of those annoying clients that I keep poking them and telling them, if you want to be useful, quit showing us the same trash that everybody else shows us and do something unique. Finance Juice has the quarterly refunding right there. Now, it says 7:30 because Finance Juice always shows you events in your own time zone. So that's my time zone. It's not the Eastern time. It will be at 8:30 Eastern. It's a big deal, right? It's one of the biggest economic events that we have, certainly this month. I would say for the entire quarter. Really big deal. We want to see those numbers. We already seen the proposal. It looks like it's going to be same old, carry the line. It's more bonds than, or more bills than coupons. And it goes into Bissett's proposal, which is based on Japan's 3-arrow proposal. Bissett's running with a 3-3-3 plan. So anything to do with energy, you're going to want to keep your eye on that. If you think about the Fed and its dual mandate between inflation and employment, with Treasury, everything's going to be focused on this 3-3-3 plan. On the one hand, it may be complex and you're thinking, I don't understand it, so I don't care. Well, I mean, a little bit at a time, right? You won't get there if you don't start digging into it. And for the most part, we're all looking at, trying to be better at traders, not really, looking for a degree in economics. So you don't have to fall completely down the rabbit hole. You just really need to know when it's coming and some of the ingredients, some of the things to look for, so that you have an idea of what is moving markets or what news may potentially impact markets. Energy is a big deal. It's a part of the 3 plan. So energy costs, energy production, the lack of, that's going to be something you want to pay attention to. And it's mostly just headlines. It's not like you got to go out and buy a news subscription service or, dig deep into that. So it's the 5th. China's back completely. They're open. They had a lot of flow last night. It looked like people were eager to get back to it after being off for a week since the 28th. NASDAQ is down the most. Then we have the S&P behind that at 0.5%. The Dow closer to flat, and the small caps just above the 0 line in the green, but they're all basically holding steady. The reason the NASDAQ is down quite a bit is because of the earnings impact. These cloud services companies started with Microsoft. Now we've got Google. It's not looking too good so far. We've got Amazon right around the corner. They're really big on the cloud service side. Got to wonder, is it going to be the same thing with them? I was looking at Microsoft, and it may be trying to find a bottom at its current location. We might circle back into that later in the day. I'll put some analysis together, post it in the chat. Played the same way on Apple. When Apple dropped down into that 200-period moving average, that made a nice reversal. So it's not like we're shopping around for a long-term play. Just if we're going to get some sort of bounce in Microsoft, we may get that opportunity this week. Just let's get through QRA first. We've got 3 different Fed speakers today that are also going to be out chipping teeth. It's actually more than that. If we see, earlier in the day, we got Barkin twice. That guy is busy. You got to wonder when you see him out there that much, what are they selling? they get a little sleazy like a used car salesman trying to pawn off a lemon. So 7:30, 8:15, 8:39, 9:45, 10, 1, 3. You see, it's going to be all day today. We've been in this sort of sideways violent rut for a while now. And it's going to continue to be violent and sideways till we can finally get some clarity and start moving forward. And today, with these numbers, that'll be the start of shining the light on what we're missing. I was talking to somebody yesterday about the forward future outlook. And for day traders, I mean, we've got it pretty good, right? The volatility really offers a lot of opportunity in both directions. And long-term, say, investment style portfolios, they're doing really good. It's the shorter-term swing traders that are really suffering, because look at how much we're missing. Just for a simple example, go back to the bear market in 2022. We had every answer to what was going on. We knew the Fed was raising rates. We knew we were headed to the downside consistently. All the moves in the dollar and yields lined up with it. We knew exactly what the Fed was doing, what earnings were doing. There was really no unknowns, right? And look at what we have now. We have no idea what the Fed is doing longer term. QRA is a mess. Earnings are all over the place. The dollar and yields, they're not doing what Scott's plan wants it to do, Beset. So we don't have a lot of answers, and that really just screws up the midterm trades, things from a couple of weeks out to, the end of the quarter kind of plays. So until we at least break the range and break down or break out, you want to hold back on trying to start new positions, sizing up, making big plays, because we don't have a lot of answers. It's not a lack of signal within the charts. The answers that we're looking for, we're not going to find in the charts. It's this background data that we're missing. All right, we got the 10-year breaking 4.5 to the downside. That level held, really gave us a fight, but we're finally getting down below it. We need to close underneath it today, keep it, and then work on it from there. The move in the dollar since yesterday, I mean, that was fantastic, but we still have 107. So this is a good start. We need to follow through with the dollar, and we don't want crazy, fast, wild moves. So they're moving in the right direction. We just don't want to see them get parabolic, right? But this is good. This is a really good start. The VIX has tried to breach $20 a number of times in the last few weeks. Keep our eye on that level if we start heading back to the upside. In the current environment with the VIX, it's not a tick for tick play, right? You don't want to be staring at that thing and say, oh, well, it went up 10 cents, it went up 15 cents. Just want to use that swag level right now of around $20, right? And we can get into it on a different day, but there's these things called VC funds, it's volatility control funds. They're non-discretionary funds. They don't get to pick and choose when they want to get in or when they want to get out. They have a set of rules that are based on volatility, and it will start to trigger an unload of their portfolios once we're holding above 20. Now, they don't just dump everything all at once. It's a systematic approach. And of course, it's all proprietary. They're not going to tell us what they're doing or what they unload first or how much they unload. But it begins the unloading process. So that's a really good line in the sand to keep your eye on right now, because it would begin to activate that VC fund unload. US dollar Japan still holding above 150. Be good to continue to keep your eye on that. We don't want to see this start to break over and begin moving back up. And you can see how clear it is with the dollar, right? And that shouldn't be much of a surprise. So breaking over in one, breaking over in the other, began working our way back up towards the 10-day moving average. We can circle back later in the morning if we have time, and we can look at the JGB 10-year. That was making moves yesterday. Somebody pointed that out. It's easy to lose track of that one since we don't stare at it every day. But if that continues to expand a little bit out of control, then we're going to have to start worrying about these two moving back up again. There's a little bit on the 333. Reduce the budget deficit to 3% of the GDP. Boost GDP growth to 3%. Increase energy production by 3 million barrels per day. That's based on Japan, the late Japanese Prime Minister 3-0 strategy, policy, stimulus, and structural reforms. This is a little different, but kind of the same. So the put wall has been brought up. That's one of the biggest changes to the play compared to where we were. And the founder's note came out just as I was beginning the morning briefing. So I haven't had a chance to look at it yet. You guys have that chance. You'll get to see it before me. It did look like that Captain Condor that they mentioned from time to time got whacked pretty good. Makes you wonder, if the guy is going to come back in and try to re-up again. But I haven't had a chance to get through it. We'll circle back on it. The put wall being rolled up, generally speaking, that's a bullish behavior or a bullish bias that we see. I'll add a little bit of caution to that. It's an automatic validation. Like we point to it and we say that's the put wall if certain qualifications are met. And I've seen Spot Gamma more than once call things a false call wall or a false put wall, where they'll say, yeah, the machine says this is the next one, so it's going to be labeled as the put wall or the call wall. But then in the note, they'll point out a better location, one that maybe has the next expiration out, but with a lot more structure to it. So read the founder's note this morning, see if they talk about that put wall, see if they provide a little clarity about why it was rolled up so far and so close. And by tomorrow, we'll have more information on that. Otherwise, having it roll up in the overnight like this is generally bullish. That would imply an upward move from here and that we've got structure at our location. I don't like that concept at this point, since we're in the middle of nowhere, but I got to get through the founder's note. We are back above the 10-week. We have the volatility trigger and the 0 gamma line within our sights. It's really close to that 60-32 cog line. If we're going to continue to try to move to the upside, we got 60-50 up here. It's this white line, which is the 3-week moving average. And it's the 20-period daily moving average, 60-48. So we've got a lot of stuff overhead that we'd have to work through if we're going to try to run up and test this volatility trigger. All of that And we would still be inside of yesterday's range that we would have to fight to get through before we can try to get a breakout on the week. And of course, to get that breakout on the week, we would have to struggle with Friday's close as well. The 21-day average daily range seems to be topped out now at around 82 points. This seems to be as wide as we're going to get. It's possible that it could expand even more from here, but we've been at this spot for a little while now, and it doesn't seem to be getting any worse. The fact that we may have gotten closer to one edge versus the other in the overnight generally would say we're going to go ahead and get to the edge that we were closest to, but with QRA on the table, that logic goes right out the window. We don't know which direction we're going to go or if we're going to, hit the side that we're closest to. We have to see how the market's going to take this data that we're getting. If you look at Monday when we got the proposal at 3 o'clock, it was already flattening out as we neared the afternoon that day. And then we get the big bar to the downside at 3 o'clock when we got the proposal. And we sold off into the close, but it wasn't like we had some big, massive crash or anything like that. The market didn't really sell into it, right? Not like we would imagine. Some of the moves that we've seen, right, where we've really had some bad days, it was nothing like that on Monday. Little bit of weakness into the close, and then after we closed, right, between 4 and 5, moved right back up again. So it's very likely we're going to get the QRA this morning. Everybody's going to be in agreement that it's just the same old, and we'll focus on the next economic event. But we don't know what Bissett is going to do, right? We've got some ideas. So if we go look at the QRA over the last few years, there's times where we just continue to do what had already been proposed, and there's no significant change to market dynamics. Here in pink, we can see the QRA, which sometimes overlaps with FOMC, and how the market just kept moving in the same direction. But if they start putting in proposals for changes, we can see the market respond to that in negative ways. First, they've got to adjust to whatever just changed, and then the forward outlook of that adjustment, usually based on why did they start making changes. So, just because we're getting QRA today doesn't mean that we're going to get big moves up or big moves down, because we don't know how much this is going to change the existing plan. When we were in that bear market back in 2022, and we started holding sideways into 23, let's just zoom out here. The game changer was this October. And we had that drive up since then. You see all these other ones, it wasn't changing the plan. It was this one. And the moves that we've had since then. It's been a continuation to the upside, just like back here where we had that continuation to the upside. So that's the worry, is that we're going to significantly change the plan. From what we saw Monday in the proposal, it doesn't look like we're going to get that sort of change, but that's the concern, right? That's the worry. We're back down to this week's point of control. We've got 70% of the volume or the value area on the upper edge. We tested it again, that 60-28.5. If we get back up around that 60-50 and work through that area today, it's possible that we could move this point of control back into the higher part of this. This is what we call the value area, that 70% range. Back up here is what we're focused on, getting it back above or back to the 60-50. If we can get that, we've got last week's point of control, 60, call it 60-80. But that still leaves us with a fight to get through Friday's close. $60.53, the weekly floor pivot. It's over our head. We've been interacting with it multiple times this week. We still haven't managed to get through it, but we're still holding near it, right? One of the things that we focus on is how far away from that weekly pivot are we? Because it'll often act as a bit of a rebound point. Think about, those videos of bungee jumpers when the bungee stretches to its fullest stretch right before the flip and it yanks them back in the other direction. I've measured the ES distance from the weekly floor pivot, and to the downside, it has a history of going farther away from the weekly pivot than from the upside, and that makes sense. The average on the downside for extremes gets between 4 and 6%. We didn't get into that sort of negativity last week, but that's the idea. That if you get too far away from that weekly pivot, you'll stall out or reverse and begin running back towards it. We're nowhere near that situation. But we also keep messing with it. We keep fighting it, testing against it, trying to get through it. So 60-50, and then a new high on the week, getting through Monday's high, yesterday's high, Friday's close, and really just pushing back up through this trash. That's the idea. The concern is there's a 1, 2, 3 fail trade set up. And if we keep kicking the door and can't get through, the markets are likely to wash it and try again, right? They'll just completely scrap it. So kind of want to see this resolved. The more times we come up here bumping it without getting through it, the more concern there is that the market's going to just try something else. For the day's floor pivot, it's a little higher than yesterday's. That's considered bullish. Price opened above it. That's also considered bullish. It's not as wide as yesterday, but it's still a wide channel, which implies that if we break out, the breakout won't have legs. Keep in mind, these channels don't make price do anything. They wouldn't make us break out, and they wouldn't stop us from breaking out. $10-day, 30-minute volume profile. We're still looking for the point of control to move down. We're going to be getting into that volume over the next few days, right? Each new candle we get on the right takes a candle off from the left. We want to take out these candles, that will reduce the total amount of volume there at the point of control, and it's likely going to move that point of control to another location. So the next one that we would be focused on is this one, especially since what we're going to be losing doesn't affect this, right? We won't start losing any of this volume until we get here. So that'll bring the point of control around that 60-80 area. And we've already got a point of control here from the TPO around 6092 cog line. So it'd be a nice setup if we can get this breakout, get above that Friday close, get above that high volume node, which puts more volume on that spot, by the way, because we'd be running through that level. Then the point of control gets moved down and we have that structure underneath us rather than above us and over our head. We still have that point of control line from 6065. It's Friday's point of control. I've kept it on there because at this point, we still haven't resolved that level to a satisfaction that I'm ready to take it off. So I'm keeping it on there, but it's not a VPOC. We've already hit it. Still, it's an area of interest. It's a point of control that I think still has relevance. And when you're using these volume profiles, you know, you can do one for the current day, yesterday, a whole week, a month. You can run these things so many different ways. Don't be concerned with what you have to do. Try to experiment. The worst that happens is it's not going to show you anything. All right. Well, I mean, so what? At least you tried. So when something gets your attention or it's highlighting a particular area on the chart, be curious, ask questions, try it out. You know, add another chart to the plan and watch it for a while. See if there's anything in it. For this level, 60, 65, it's got my attention. I'm continuing to watch it. And as far as I'm concerned, we've got unfinished business there. And it's an area of interest. We do have a new VPOC from yesterday. I really just should get close enough on the points and don't even worry about the ticks, but I don't know. I can't bring myself to do it. 60.57 and 2 ticks. That'd be yesterday's point of control. If you want to just use 60.57 or 60.58, it's not going to matter. I promise you don't need the 2 ticks. It's close enough. That's the level where the greatest amount of trading took place yesterday. So you don't have to put a bias in this and call it support or resistance. It's unfinished business. It's an area of interest. It's where the greatest amount of trading took place yesterday. And that's all fact. There's no guessing or making assumptions in that statement. So mark it with that in mind and just consider the idea if that's where the greatest amount of trades took place yesterday and we go back there, especially today, there's likely going to be some trading that takes place, heavier trading than what we had currently on the day, right? And at the very least, if you're watching it and we say break this Globex high, for an example, and you're trying to run it long on that Globex breakout, at the very least, that line would be a warning on how far you could get before we hit some sort of high volume, and that may interrupt your trade. Otherwise, the TPO and the volume profile on today's price action, they're in line, they're in agreement. Nothing really stands out here. A little bit of ceiling issues earlier today at 60.50, but it's a solid round level, options level. We would expect that sort of volume, and no real iceberg along the lows. So just everything acting as usual. We're still underneath Friday's close. We weren't able to recover it like we were talking about yesterday. You know, how it took all week for us to even test the previous Friday's price action. We were able to do that this week relatively early. If you think about where we closed on Friday and then where we opened up and the dip down, the rally back up, closed pretty close to that Friday level, and then we were able to take it out. So we got the gap closed, but we weren't able to keep it. And we ended up, you know, even with this little loop, we still ended up closing underneath. Focusing on last week's price action, you know, there's an old saying that the body of the candle is where 70% of all the trading took place. There's another old phrase in the market that says wicks are a representation of stops that were triggered. So if we focus on last week's price action and just kind of narrow this box down a little bit, there's where most of the trading took place. From 60.50 to 6,100, it's going to be a real fight to get through that level. It's going to take a change in sentiment, market structure. So we're looking for the news that can do that. The economic event, the impact that will finally get the market some understanding that it's looking for to push through that level. We're still above the 10-week, just barely. Anything less than 1, it's a bit like gravity. We'll just continue to chop around it. We can go above it, below it, and we can just sit here chopping back and forth. -1, +1. We need to get out of this range, and it could take a while. On the other side of that, though, this is a correction, right? It's a correction in time versus a correction in price. But sitting in one spot, digesting, especially around some solid level like the 10, it's not necessarily a negative. Especially when there's a lot of data that we're waiting for, like QRA and Mag 7 earnings, which, I mean, we're almost done, right? We've got Amazon, and then later in the month, we have NVIDIA. But Amazon pretty much wraps us up other than NVIDIA. And we've got a lot to focus on at that point. We're still below the 10-day. Not yet even 0.5%, so certainly not oversold. We're not stretched in any way. This doesn't owe us anything, and it's likely that we can just crisscross back and forth through that 10 because we haven't gone far enough away. So this is just another representation of that digestion or correction in price, correction in time, rather than a correction in price. $90,000 was the overnight volume. I don't know why I was expecting a little bit more than that with China back, but you know, it is what it is. It's not low. 90 is more than acceptable. It's just that after we've been getting numbers in the hundreds and in the 300s, 90 just seems to come up a little short after that. But 90 is fine. There's nothing wrong with it. We also were not seeing a bunch of hedging this morning. And we talked about this earlier in the week, how we can use the market maker move to spot additional hedging, and we don't have it. But what we noticed earlier in the week was that they were hedging through the whole week, right? That there was trades that we were spotting farther out. We don't see those this morning. And the little bit of hedging that we do have this morning hasn't been enough to change the volatility on the front end farther than tomorrow's, right? The next expiration. But we are starting to see some, what you would want to look for is out of the money options trades to change that number. And we want that number to be higher than this number, which would give us the market maker move. But if you're on a platform that don't have it, then just watch those two numbers. Over a 9-day period, over a 5-day period, the VIX is still up 9.25%. Even with it being down today more than 7%, it's still up more than 9% over a 5-day period. Mag 7 is down. China K-Web constituents are down. Communications, China again. Nat gas. Our own little homemade ETF showing the Mag 7 group. It's down. Growth, Bitcoin, all of those down this morning. It'd almost be easier just to look at, well, what's up this morning? At least 0.5%. Gold miners, NASDAQ volatility, and the 10-year. But this, if I go to look at TLT on Thinkorswim, it just gives me an error. So I don't trust it showing up on the watch list since I can't chart it on Thinkorswim anymore. I don't know what the issue is with that. It's been that way for 9 months or more. But we can see TLT, it's up. So TNX, it's going to be down, not up. Now, this has gotten a little violent in the last hour or even in just the last 15 minutes, but it is gapped up. So we've got a lot of work to do, but it's finally getting out of this range. It is in a megaphone pattern also. So, those can continue to expand wider and wider, but it would still imply there's a reversal coming before we even get to 90. If we zoom out a bit, we can see the MACD. That's a really strong signal, but it was a really strong signal back here too, and we still stalled out underneath that 95. So it's rolled over. It's pointed in the right direction, but it's got to get both lines above the 0 and then keep it. And we haven't got that yet. So if you're a trader looking for, the confirmation style trades, but you don't have confirmation of a long play yet. I don't like that approach anyways, but to each their own, right? I'd rather have got it when it was nasty and low just to have a low risk entry. You pay for confirmation. That's a phrase that holds true. Solar, gold miners, bonds, silver, so precious metals, uranium. If we're looking for a rally day in the S&P and the NASDAQ, that isn't going to do it. There's a couple of different ways that we can get that strong breakout rally day in the ES and the NASDAQ. One would be through the sectors, the Mag 7 group, consumer discretionary, financials, technology. That's one side. That's one way to do it. And it's an obvious thing. We can spot it in the pre-market, catch it in the morning briefing. We would see that aggressive flow coming in. We don't have that. After the market opens, we can get the moves from really strong options push. Well, we don't have that data yet, so we can't use that yet. And then there's news. The only other thing that can give us that kind of push would be the connecting charts like treasury yields, a big move in crude or gold, dollar. We don't have that. But if we want a strong breakout rally day, this isn't it. For a strong breakdown and sell-off, we're going to need some negative news or negative options flow or a really strong sell-off in the Mag 7 group. We'd want to see chips down and getting worse. Software as a service, cloud, and instead we've got China down heavy. Cloud, I mean, you know, that beat down a little bit out of Google, but it's not continuing to drop. And in fact, it's just one little algo print. China, I don't need to worry about nat gas. Airlines, and it's just a little algo print way down here, 25.80. After running up to close at the high of the day, this gap down doesn't even take it outside of yesterday's price action. Crude just maintaining the range and doing what everybody is looking for it to do. Continue to stay weak. Now, Bitcoin broke out of yesterday's range after the close yesterday. Now it's come back up and it's fighting with its own Globex range. We need to get through yesterday's range and work on getting outside of Monday's high. That's a lot of work to do. It's not even through the midpoint of this really big bar. So you can use that really big bar, mark the half. That'll be your challenge point, and it looks like it'll be close to $23 for a nice line in the sand. We got nothing, right? Waiting on data, QRA in 15 minutes. Let's get through that, digest it, get some clarity. Then we'll start working through these other events one at a time. And later in the day, we've got these Fed speakers. Now, I haven't had a chance this morning to go in. When you have Fed speakers, especially this many, what I like to do is check to make sure that they're actually having an event. It could be a luncheon at the Girl Scouts for all we know, right? It could be a taped, prearranged interview where there's no QRA and there's no new insight, or they're not projecting any bias into the market. So just because it says that we've got a Fed speaker, you know, don't assume automatically that it's a threat. Just go in and check. And one of these, you know, it's after the market closes anyway, so it won't be that big of a deal. But, you know, you can run a check and see where they're speaking, what they're going to be speaking about. And that way, you may find that it's no threat at all. Then you don't have to worry about it. But if they're going to get Q&A from reporters, it's a potential threat. Even if it is a luncheon somewhere, if there's going to be questions, QRA, and any sort of conversation with reporters, there's a threat on the table. And that's because they can be taken out of context. They can be deliberately misquoted. They can accidentally say something that they had no intentions of saying in the first place. And I've seen that happen. I've felt that happen. It didn't feel good. So just check. Otherwise, we got a busy schedule, lots of stuff on the table, and we're looking for the dominant thesis on the day. We don't have it. Maybe it's going to be QRA, but if that's in line and there's no significant changes, the market's just going to shrug QRA off and it's going to focus on the next thing on the table. And employment's a really big part of the entire puzzle, so it's likely that'll be what they focus on next. Everybody, be careful, be safe. I'll see y'all tomorrow.